Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. Founded it 21 years ago, back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and my passion, mechanical trading algorithm systems, such as our 21 Spine ES mean reversion systems, and of course, our amazing KISS systems available in the systems section. You can see, for example, today we had new smart trailing stops generated in the S&P 500, SPY, Tesla, Mara, and Microsoft. You can see Mara current trade is up 31.5%, while the last trade was up 30%. These aren't back tested, these are live trades from the system. Great reason to consider subscribing to Breakpoint Trades. Click the enroll button. And anyway, let's get back to this video at hand. It is Monday, July 1st, 2024. This is the back-end recorder for our standard web page format for our subscription service. I'm going to go ahead and get this recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, July 1st newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. Same theme as we always keep. We first have our opening discussion, make some admin comments if we have any. Then we follow up with the general market indexes. We'll look at the Dow, the S&P, the NASDAQ, the small caps. We do a top-down approach, okay, from the weekly, daily, down to the smaller intraday time frames. We'll look at a few indicators. We'll look at the VIX. We'll look at high-yield corporate compared to the S&P. We'll look at the bond market and the 10-year Treasury yield. We'll look at a few major sectors, just a handful of them. We'll look at the U.S. dollar. We'll look at Bitcoin, Bitcoin-related stocks, commodities, precious metals, GDX, and we'll follow up with some of our recent trade setups. And I added a few new trade setups this evening. Again, guys, from our weekend newsletter that Steve did, no major technical changes on the market, clearly. All right, so nothing has changed from the weekend. Remember, this is a shortened holiday week. We're in the summer doldrums. That said, on Tuesday, Powell is speaking basically right at the market open at 9:30. So let's see, if he says something that moves the market. Otherwise, there's plenty of other news this week, from various inflation data to the monthly payrolls on Friday. Okay. And again, being a shortened holiday week, the market trades a half a day on Wednesday and it's closed on Thursday. So shortened holiday week. And let's go ahead and get started here. So first image below, item number 2. So this is taken directly from the website, from the systems section, the KISS systems. So today, again, under the BPT basket, remember we have all these other baskets. We have a total of 750 stocks and ETFs that the systems run on. So out of the basket here today, we had new smart trailing stops on the S&P 500, on Mara, SPY, Tesla, TLT stopped out. But you can see the S&P smart trailing stop, it moved up a little bit here. Mara moved up nicely from 1680 to 1790. That current trade's up 31.5%. The previous trade gained 30%. So you're looking at about a 61% gain on both of those if you took both of the trades. And again, these aren't back tested, guys. These have all been live trades generated from the system. We've had the KISS tables live for a year and a half now. Okay, you can see Tesla's up 12%. Previous one was a small loser. Microsoft up 7%. Previous trade it made 19%. So again, congrats. You've been following the KISS systems. Really love these, and I am hoping in the future to add the next iteration to these. I'm not talking about the high performance versions that I'm going to be launching soon. I'm talking about new losing my train of thought here. New data, I feel like Biden. Sorry about the political comment, but I feel like Biden. I'm losing my train of thought here. So I plan to add some new technology, new trade rules into the systems. I have some ideas that I've been working on in my head that I think will improve just the standard KISS systems. Anyway, let's go ahead and move on. So back to the general market newsletter. Item number 3 shows the index sector table, what transpired today. So again, you can see major indexes were up with the NASDAQ leading, and of course the Russell continues to underperform, down 0.84%. Now it outperformed last week, but otherwise the Russell has underperformed all year. As far as the 21 market sectors, kind of a 50-50 mix of up and down here. So the weakness primarily in the home builders today. I mentioned earlier that looked like it was quite weak. It was on a ledge support. It started to break that support. Materials down 1.5%. Oil services down. Communications, retail down 1.8%. Transports down 0.75%. The strongest sector today was metals and mining, up about 1.5%. And of course, technology. Currencies, US dollar basically flat today. Crypto was up nicely. It's still otherwise trading a large range, which I'll show you when we get to that section. Commodities, DBC, that's the index, is up 1.25%. Crude oil up 2.25% today, nice move. Natural gas down 4.7%. Still cannot catch a bid. It's had a pretty good sell-off from its 200-day moving average. Copper bouncing a little bit. Uranium and wheat. Precious metals were kind of mixed here. Gold flat essentially, silver slightly up, GDX, the miners, slightly down. And as far as the bond market, big move up today in the 10-year, 30-year Treasury yields. Next, image number 4 shows the economic news calendar. First off, on Tuesday, July 2nd, remember, Powell was speaking right on the open at 9:30. Otherwise, before the open, we have the jolts. And we'll see how the market reacts to that. On July 3rd, ADP, initial jobless claims. So a lot of these, like initial jobless claims, usually those come on Thursday, but they got shifted to Wednesday. We also have S&P PMI final, trade balance, factory orders, ISM. So a lot of data here on Wednesday, that half day. And Friday, of course, is a full day for the market. We have the non-farm job payroll report. Next. Let's get to the index charts. Chart number 5, here's the daily snapshot of the 5 key major indexes. Again, first off, you can see the Dow up here. Honestly, it's been sideways for over 3 months now, since March. Right? S&P been going sideways here. Made a brief new high last Friday before pulling off. Still holding that 9 EMA, still above the middle Bollinger Band. Same for the NASDAQ. Russell at the bottom. Big sell-off today. Been underperforming. Chart number 6, here's the Dow. So you can see the Dow here. I added a coil. So it appears to be forming some sort of coil. We'll see which way this eventually breaks. Moving on to the S&P 500 charts. Here's the S&P weekly. Again, it's only Monday, but like I said, we still have this little MACD divergence we're monitoring, this RSI divergence. Divergence isn't a sell signal on its own, guys. We got some dojis up here. So once we do get a correction, I am looking for some sort of fourth wave pullback, at least to that 9-week EMA, maybe even down to the 20, perhaps. But for now, we haven't broken down yet, but we do have this divergence we're monitoring. Chart number 8, here's the daily KISS system for the S&P. Now this is the custom version I show in the newsletters. So you can see how it's been doing. You can see how it went long back on October 31st last year. Exited in early April. Righted itself, got back long in early May. And it's been long the whole time. Current smart trailing stop still pretty wide at 52.94, 95. All right. We're above the ATR. We had the Mark 9-13 combo a week ago where we got a slight pullback, only a couple days before making a brief new high on Friday. And you can see the Mark 9-13 combo you had there in May, and then you had a little pullback to the ATR. The moving average ribbon down here, again, I love the moving average ribbon with the BPTMA Deluxe. So you can see when the BPTMA it gets too wide away from the ribbon, that's when you do for some mean reversion, which you got. Then you had that first pinch squeeze into June 1st. That was a hell of a buying opportunity. I love when the ribbon flips from a bearish to a bullish configuration and then pulls back, pinching into it. That's always an amazing buy. You were right at the ATR there. Again, I'm showing you this, guys, because these are future things to look for. And you can see how at that DeMark 13 a week ago, you see how wide the BPTMA got from the ribbon? So that needed to be working off, and you can see it's been working off a little bit since. Image number 9. Now here's the KISS S&P standard from the actually KISS tables. So, this is the one that's on the tables, and this one had a new smart trailing stop today. It moved up to 53.61. I'm showing you this because it has a tighter stop than the daily above that I just showed you. So again, it depends on which one you want to use. Otherwise, this current trade's up about 6.5%. Remember, it caught a monster trade before. That's the beauty of the KISS systems is, once in a while it'll get out and then it'll get back in a couple weeks later. But it always keeps you protected with these smart trailing stops. Image number 10, here's the 4 time frames. So here's the daily up here again. We're above the ATR on all these time frames, except for the 78-minute, which we're below. We had a little end of bull cycle on 130-minute last week, which did produce a pullback. We're still holding the ATR there. Again, guys, if we weren't in a holiday week, right, I would be more concerned here. But honestly, just given the holiday week, low volatility, low volume, a lot of pros on vacation, I just wouldn't be surprised the market holds up this week. But, if we get that fourth wave pullback, maybe it'll be next week. Moving back to the standard charts, here's the S&P daily. This one's just showing a very simple 5-wave uptrend from that March lows. First, this also has the moving average ribbon here. It doesn't have the BPTMA Deluxe. That's not available on stock charts, okay, but it has the standard MA Deluxe moving average ribbon. Anyway, you can see the 5 waves here. We're in this channel. We're still holding the 9 EMA on a closing basis. Below that, then your 20 and your uptrend line, okay? Next, number 12, here's another daily view of the S&P. Steve showed this on the weekend, this rising wedge type thing. Now, under this, soon we could have this wave 4 pullback. Okay, this is just one depiction. If we were to pull back and break this wedge, back test it, that could offer resistance, and you get a bigger wave 4 pullback, maybe down to the 5200-ish range. It's something to watch for, but Steve thinks we'll get one more high, maybe with the holiday week, wouldn't surprise. But this is definitely a valid option. Chart number 13, here's the simple daily chart with some of these wave counts. Again, you have a big demand zone here. Here it breaks down the wave counts. 1, 2, The alternative view would be wave 5 high of last Friday. That's our alternative view. We don't favor that one. Otherwise, we're favoring that maybe as a wave 3. If we chop around here this week, don't take out Friday's spike high at 55.25. Maybe we form a lower high, come down again in that wave 4. There's an open gap down here as well. Could be a magnet. And then you go up again to a new high in wave 5. Now, I do think if that occurs and that takes place well into July, I think late July, early August, then the market's set up probably for some correction. Chart number 14, here's the half-day chart. Just shows you that same wave count breakdown. This also shows you an uptrend support line. Chart number 15, here's the 60-minute chart. Again, you can see, Friday we made that spike high. That was an easy sell, quite honestly, last Friday. Then we pulled back. You can see this area right around this 54.45 was previous resistance. It's been acting as support. So we're holding the support here. Now, if we lose the support, that would open a door to fill this gap. But for now, we're holding the support. Next, chart number 16, here's the triple Qs KISS system. Again, no changes here. Smart trailing stop 467.80. And again, you can see how moving average ribbon is a great guide here at the BPTMA. You had that first pinch squeeze in early June, just like on the S&P. You can see how wide that BPTMA got from the ribbon right at that mark 9 over a week and a half ago. That led to that high, and since then it's been working off. Image number 17, here's the 4 time frames. So the daily up here, upper left, which I just discussed. Half day, we're below the ATR. Noted that. We do have a support cycle here, though. You see that? And we're above the ATR in these lower time frames. Chart number 18, here's a daily chart. Again, essentially shows the same count on the S&P, essentially. This one could have a potential little 5 here, perhaps, but we have an open gap down here. Next, chart number 19, here's the triple Qs half-day chart, 195-minute. Again, showing you the same thing, showing you the uptrend line here from the April lows, that support. You got an open gap here, so on a pullback, that could be a target area. There's also a big open gap down here that, something to watch on a bigger correction, but otherwise, no real changes here from the weekend. Image number 20, here's the 60-minute chart. Next, chart number 21, here's IWM small caps, again down 8.8% today. Again, it did bounce off that demand zone a couple weeks ago, but it's just chopping around here. Small caps have lagged so much this year. I still think sometime this year we're going to see the small caps come and outperform, play a little catch up, but for now they're still stuck in this range. Okay, that does it for the major indexes, guys. Let's go and move on. Look at a few indicators. So here's a chart. It's got a lot of different things on here. So it's got the VIX here and the VBAX below with the Bollinger Bands. You can see here, VIX has just been chopping around near the support. Bollinger Bands are starting to pinch here a bit, so we want to keep an eye on that. And we also want to keep an eye on for when it closes outside the Bollinger Bands, okay? This ratio here of the VIX to VBIX, this to me is important when the ratio gets outside the Bollinger Bands. It's not outside yet, but that can be powerful too. Chart number 23, here's a clean chart of the VIX, and you can see again we're just down in this demand zone. We've been holding that for the last month and a half, and still holding that. Previously we stalled at the supply zone. Chart number 24, here's the 60-minute chart showing you this open gap. We didn't almost filled that gap here, I guess, the other day, and there's a big support down here. Next, image number 25, here's the S&P 500 versus high yield corporate. That's high yield corporate bonds. Again, the two are highly correlated. I mean, you could see it here. Notice how they move together very well, very correlated. But again, when you see divergences, just like back here in late October, you had a positive divergence with high yield corporate making a higher high, S&P making a lower high or lower low. That led to that bottom. And it also led to the top in July of late last year. You can see when the S&P made a higher high, but high yield corporate did not. Now currently we still have this divergence. I've been showing this for a while, but S&P made a higher high last Friday. High yield corporate did not. Unless this curls up and reverses up, this could be a catalyst for that wave 4 pullback. Now looking at the bond market, here's TLT 20-year bonds, stalled at that resistance, pulling back. We're at a support trend line here. If it loses this, it may pull all the way down to here. That would be another catalyst for the market. Remember, bonds sell off, rates would be rallying up. It would spook the market. Chart number 27, here's the 10-year treasury yield. Again, nice rally up. Honestly, guys, on a bullish, this almost looks like a bullish ABC pullback, 3-wave. We'll see what it does here. If this were to break out over this trend line, go up, that would, again, spook the market. And chart number 28, here's the weekly chart. You got a pretty obvious coil forming here, so we want to see how this resolves itself. That could be also strongly affect the markets. Okay, let's go ahead and move on to some market sectors. Chart number 29, here's XLK Technology. Again, well off the lows today, bouncing near that 20-day moving average, hammer. Again, two stocks make up almost 44% of it. Everything's so concentrated these days. Chart number 30 here is the semiconductors, similar look. Recovered that 20-day again today. Notice you have the 9 and 20 MA squeeze. Speaking of semiconductors, here's NVIDIA. This was down today, recovered. I'm still favoring this as a wave A, B, C. So, maybe it chops around this week, but I still wouldn't be surprised if this were to have a move down into that demand zone. I think down there on the 50-day moving average would be a good buy. Chart number 432, here's financials. They've been coiling, so this is one to watch. You could trade this. Remember, tradable ETF. We'll see which way this breaks. Chart number 33, transports, pulling back off resistance. Again, this has underperformed this year. You can see since March, been declining. Chart number 34, FedEx was one of the long ideas we put out over a week ago in the transports, and you could see it had a nice base and one hell of a move on that news. I know at least a couple of you had that. Congrats on that. Chart 35, home builders breaking support here. This was looking weak. You know, it was still in the pattern, but this area of support had been tested a lot. When you test support too many times, it weakens it. Think of the analogy of a little kid on a frozen lake jumping up and down on the same spot on the ice too many times, it eventually breaks. I know it's morbid, but it's a good example. You test it too many times, it weakens. Anyway, big loss of that support. Now there's a demand zone down in here, happens to correspond with the 200-day moving average. To me, that would be a target area. Chart 36, materials selling off here today. Again, maybe this also wants to go down to its 200-day moving average. Chart 37, S&P oil and gas exploration. This got out of order. I meant to have this down by the XLE, but you can see it's still in this pattern. You had a pretty good buy right around that 200-day moving average over a week ago, but otherwise, technically needs to get out of this channel, which it hasn't done so yet. Chart 38, healthcare. Been pulling back off that resistance, as you can see. Kind of a double top area there. Chart 39, utilities, pulling back here as well. Now it's below its 50-day moving average, and you have the 20-day moving average curling down. So 20-50 squeeze going on. Chart 40, XLE Energy. Again, this one did get out of its channel. Again, a heck of a buy at that 200-day moving average. Black candle today, but this is at a nice move, and crude oil has been strengthening. Chart 41, ExxonMobil, also nice trade. That was a good buy down there. Last dividend date was in May. Remember, this pays quarterly, so it's going to be a couple months before the next dividend. Chart 42, oil services, we're down today 1.4%. This is the bigger picture view. Again, to me, if you're long term, you could be long, perhaps have a stop below that lower trend line. I do think eventually it'll fill that thin zone up there, which would be a very good move. But for now, it's still stuck down here near support. Moving on to commodities, chart 43, DBC, that's the index, up 1.25% today. Remember, we got a big 2-year coil forming, so we want to keep an eye on this going forward. These coils can produce strong moves, so we want to watch this. Remember, tradable ETF. Chart 44, crude oil up nicely today, right into this supply zone. Remember, rallied perfectly off that demand zone. You can see how great these supply and demand zones have been. So these are something you want to utilize, and there's plenty of tutorials out there how to identify them. I should do a tutorial on these as well, because these are very powerful. Instead of just drawing horizontal resistance as a line, these zones are very powerful. Chart 45, natural gas continues to melt down. Remember, I was wondering if it would find support of this 50-day moving average last week. Well, it didn't. Continues to melt down. Down almost 5% today. You can see how, honestly, all year long, since last year, it's stalled at the 200-day moving average 4 times, essentially. Chart 46, copper, up 0.6% today. Back to its 9 EMA. Again, had a nice correction back in May. That moving average ribbon got too wide. Remember, mean reversion. That's been worked off. You got the 61 fib down here. Chart 47, here's the weekly. Logically bouncing around this 20-week moving average here. Chart 48, DBA, agriculture, sold off recently. All the way back to this demand zone. It's trying to find a little support here, but this also, remember my analogy of the little boy jumping on the frozen lake, it's tested the support a lot. If it loses this, I think it has a quick dump down to this next demand zone. Honestly, I wouldn't mind seeing that. To me, this area would be the better buy. You could try it here with a stop, but to me, this is your better support. Next, chart 49, Bitcoin. As I stated earlier, Bitcoin is still stuck in this horizontal range overall. The range exists from 56,500 to 73,000 essentially. These are your big supports below should this be lost in the future. Chart 50, Mara. I've had this on my watch list. This busted out in a big way, up 13.65% today. We like coil patterns because you get sharp moves when they finally break, and you can see we got it on a big volume move today. A lot of other crypto stocks were down today. Again, this was on the watch list all last week, guys, so you could have easily bought it. I talked about being long inside the pattern with a stop below the lower trend line. Moving on, here's the US dollar, up, like I said, just up slightly today, up a couple pennies. Here, still in this uptrend channel. The better way to view the dollar, I think, is this weekly chart. You can see this very obvious coil forming. If the dollar were to break out of this coil, that might cause that pullback further in the precious metals that I would like to see. Chart 53, here's the euro. Now, euro is still holding support here as well. Again, if the dollar is going to rally, the euro should break down. But this is at support, so if this rallies, the dollar will start selling off. So let's keep an eye on which way these charts break. Moving to precious metals, chart 54, here's gold, essentially flat today. Again, this is your big critical support, this trend line. If it loses this, like I said, I think it moves down to this demand zone, and likely that 200-day moving average would play catch up. Okay, if the dollar were to rally, that would be a cause. Again, the more it goes sideways here, the more it has the possibility of forming a coil and working off the overbought. Okay, you can see the moving average ribbon's already pinched. So we'll see which way this goes. Chart 55, here's the tradable ETF GLD. Again, same pattern. If it were to break support, again, this is your big support down here, the demand zone, the uptrend line. Chart 55, here's the inverse ETF GLL. This is your resistance, which has been unable to take out so far. If it does take it out, target area is the supply zone up here. Chart 57, here's gold on the weekly. Again, this is our primary wave count, where the recent highs was a wave 3. We're in some sort of wave 4 consolidation. Eventually, we're going to move to a new all-time high in gold as a wave 5. And guys, honestly, this is the very bullish. This is the nested 1, 2, 1, 2. So this would be a wave. If you get a new high in a wave 4, that would produce a wave 5 of 3. So that all goes along with gold possibly going up to that 3,000 plus target, long-term target of mine. Chart 58, here's silver. Again, slightly up today, no changes, still in this nice channel. You can see how the moving average ribbons are starting to come together a little bit. Chart 59, here's the weekly view of silver. Chart 60, here's GDX, the miners. Again, unable to get out of this channel. The price has been stalling there. So stocks underperformed today a little bit. Should we get a correction in the miners, dust, I still have my eye on. You have a kind of an inverse head and shoulder look to it here. See that? Moving average ribbons pinched. I own a little bit of this, but I will add if it looks like it's finally going to break. Chart 62, CDE, it's a silver stock I pointed out last week that was coiling. Down today. This could go either way. It could find support here, or it could break down. Finally, guys, moving on to the trade ideas. Here's Amazon, which has been on a watch list for a while. Broke out last week. Pulled back on Friday, but kind of looks like it's flagging here. Wouldn't be surprised if it makes another high. Chart 64, Tesla was on our watch list 2 weeks ago. Had a nice trend line break here at around the 182 area. Nice move. Now off the highs today, but still up 6% today. Chart 65, Ford. Ford's been on our watch list. Broke out last week from this kind of coiling pattern. It's been moving up nicely. Chart 66, GRND was also on our watch list. Had a big move last week. Pulling back a little bit today. Again, on that big gap and move last week, you should have taken some profits. Chart 67, Rivian, bouncing a little bit today. Beautiful move off that support demand zone 2 weeks ago. Kind of an inverse head and shoulder look. Volkswagen, I think, made a big, what caused that news, I think if I recall, Volkswagen made a big investment into them. Chart 68, PG, Procter & Gamble, it was on the watch list. It broke down from this pattern. I had it as a long originally. You could have shorted it on the break of the support. I didn't short it. I probably should have, but it broke down. Chart 69, BKR, also nice trade. Remember to take some profits. It's been a nice trade from that channel break. Chart 70, STVN was one I mentioned last week. This little falling wedge, MACD divergence. To me, it still looks decent, low risk, bottom fishing trade. Charter 71, AMT, American Tower, still in this pattern. We'll see which way this resolves. Charter 72, Triple M, 3M, tight coil here. Guys, this could go either way. It could break down, break up. It's getting tight. Charter 73, MDGL, still watching this sucker. It's got this cup and handle look to it. Charter 74, Apollo, still watching this one as well. It's got clean resistance up here around 119.70 or 120 if you want to round that up. Here's some new setups. TCRX, this has had a nice sell-off. You got a big doji hammer candle today. So one mean reversion bungee bounce would be 1 penny over today's highs. So today's highs was 593. So 594, 595 be a trigger with a stop in place. Charter 76, CLEU. Here's a Chinese piece of crap stock, but nice little pattern. Maybe it gives you a trade over this resistance. Charter 77, Trox. This is a 60-minute chart. Got a clean little horizontal rectangle pattern here. Resistance around 16. We'll see if it breaks this. If it breaks this, I think you can get a clean shot up for a buck or so, 50 cents. Otherwise, or it could break down and form a better divergence. Okay. Finally, some of these dividend plays. BIZD, I mentioned this one last week that it was going to go ex-dividend on Monday. If you bought it on Friday, it was actually up this morning. So you could have sold this morning and received that dividend. Dividend was about 44 cents, pays quarterly, and this pays about a 10.3% annual dividend. Okay. Here's some other dividend plays. DSL also pays about a 10.5% dividend. Now this one, I don't have the ex-dividend date yet. We captured the last two. This one probably comes in the next, we should know in the next few days. It's usually around the 10th or 12th of each month. Again, it pays monthly. That's what's nice. The pattern actually looks pretty good too. Charter 80, NUSI. Here's another dividend play. This is one of the ETFs that they buy NASDAQ 100 stocks. They sell options, covered calls, buy puts on for protection. And so it tries to limit some of the downside. It pays monthly. So this one should pay toward the later July time frame. Charter 81, AMZA, another one of these, similar thing. This pays about a 13% annual dividend, pays monthly. This one should pay kind of around the middle of the month of July. Charter 82, Main Street, another one. This is paid consecutive, consistent dividends for 15, 20 years. So anyway, ex-dividend date on this one is July 8th. Okay. And the final one, OXCL. This one pays about a 19% dividend. It's obviously more volatile. Beautiful coil back then in April. That would have been a good time to buy it. Kind of has a little head and shoulder look to it right now. But anyway, the next ex-dividend date is the 17th. Okay. Again, it pays monthly, so that's what's nice. And it pays a pretty good annual dividend. All right, guys. We'll see what happens tomorrow. Quick check on futures. ES futures are down about 6 points. Okay, we'll see where things are tomorrow. Remember, Powell speaks in the morning. Have a wonderful evening. Take care.